On the TradingView platform, set the chart's time frame to 5 minutes. Next, click on Indicators and search for Andean Oscillator, the one created by Alex Grover. After that, look for ADX, or Average Directional Index, which is available as a built-in indicator on TradingView. Add both indicators to your chart and adjust only one setting. Place a horizontal line on the ADX at level 10. If it's not exactly at 10, open Settings, go to the Coordinates tab, and set it manually to 10. This setup is used for a scalping strategy designed for short time frames such as 1 or 5 minutes. The chart shown here is the USD in the Forex market. You can apply this method to any market or asset, including commodities, crypto, or stocks. The only essential condition is that the market must have high trading volume and liquidity. This matters because in scalping, trades capture small price movements, so wide spreads or gaps between bid and ask prices can easily distort entries, stop-loss levels, or profit targets. In Forex, major pairs are ideal. In crypto, pairs like BTC USDT, and in stocks, large volume companies such as Apple, Tesla, or Microsoft work best. Let's discuss the trading strategy in detail. The core idea is to identify when the price moves in a tight range, a period of market consolidation, and then capture the breakout when that range is violated. The two indicators, ADX and Andean Oscillator, help pinpoint this condition. The Andean Oscillator features 3 lines: orange, green, and red. When the orange line stays above the red and green, the market is flat or non-trending. If the red line rises above the others, it signals growing bearish momentum, while if the green line moves on top, it suggests bullish momentum is increasing. The ADX indicator, on the other hand, measures trend strength but does not indicate direction. When ADX is below 20, the market is not trending. When above 20, a trend is present in either direction. In this setup, however, we lower the benchmark to 10. When ADX falls below 10, it shows extremely low volatility and a potential build-up before a breakout. Here's the process. First, watch for the ADX line to dip below 10. Second, confirm that in the Andean Oscillator, the orange line is above both the green and red lines. This combination means the price is consolidating, the market is calm, and no strong trend or momentum exists yet. Once both conditions are present, wait for the next signal showing a breakout. To trade the breakout, monitor the Andean Oscillator again. Suppose the red line crosses above the orange, that indicates rising bearish momentum, signaling a potential downward breakout. You may confirm this visually through the chart, as price candles close below the consolidation zone. In that case, you can enter a short position, setting the stop loss above the consolidation area, and the take profit at roughly 1.5 times your stop distance, a 1 to 1.5 risk-to-reward ratio. Now let's review another example. Sometimes, setups don't occur frequently. This is a low-frequency strategy, meaning you must be patient. Opportunities appear only when ADX drops below 10, which marks a very tight consolidation and therefore a high chance of significant breakouts. Afterward, suppose you spot ADX below 10 again and see that the orange line dominates the oscillator, confirming the flat condition. Watching further, you notice the green line crossing above the orange. This suggests that bullish momentum is building and a possible upside breakout is underway. Here, you could enter a long position, with the stop loss placed below the consolidation range and a 1.5 risk-to-reward ratio for your target profit. Let's look for another opportunity on the chart. You'll find that patience is crucial since the setup won't appear every few minutes. Still, when it does, it often signals an effective breakout zone. Once again, let's assume the ADX dips under 10 and the orange line sits higher than both red and green, showing a quiet market period. Then the red line crosses above orange, indicating renewed bearish pressure. This could be your short entry signal. Enter the trade, set your stop loss above the consolidation, and aim for the 1.5 reward ratio on your target. Keep tracking the chart, and you'll notice periods where ADX remains above 10 for extended times. This means no setup is available, and it's best to wait rather than force trades. Only act when the ADX condition is met. Here's another example for clarity. The ADX drops below 10 again while the orange line dominates. After some candles, the red line crosses upward through orange. Another potential breakout scenario to the downside. You can take this signal as an opportunity for a short entry using the same risk and reward parameters. Even though this method is highly accurate, no strategy in trading can achieve a perfect win rate. Markets are uncertain, and every technical setup can fail occasionally. That's why proper risk management is vital. One of the most reliable rules is the 1% rule, which limits your risk on each trade to no more than 1% of your total trading capital. This keeps you consistent and prevents large drawdowns from a few bad trades. Always monitor your performance through a trading journal. By documenting your entries, exits, results, and notes, you can identify recurring mistakes and steadily improve your discipline. Trading success comes not only from good strategies, but also from emotional control and systematic record-keeping. To recap, here are the main conditions for this strategy. Use a 5-minute time frame or 1 minute for faster markets. Add the Andean Oscillator and ADX indicators. Draw a line at ADX equals 10. Wait until ADX falls below 10. Confirm the orange line in the Andean Oscillator is above the red and green lines. Once a line crossover occurs, green over orange equals bullish, red over orange equals bearish, take the breakout trade. Set your stop loss just outside the consolidation area and target a 1.5 risk-to-reward ratio. Apply disciplined risk management and track trades in your journal. Understand that trading requires consistency, patience, and risk control. A well-tested system like this can yield solid results over time if executed with discipline, valid signals, avoid emotional trades, and continue refining your process with practice and proper management. Strategies like this can help identify clear opportunities in volatile or quiet markets alike. This walkthrough shows how to use the Andean Oscillator and ADX combination on TradingView through a simple, structured approach. Stay patient, manage your risk wisely, and always keep learning from each trading session.